Trouble with YouTube today? It's going to be one of those days. Yeah, it could be one of those days. Yeah. Hey, good morning. Looks like the other stream just died while I was making coffee. Hey, never turn your back on a stream, right? Well, I guess we'll just go with this. I have more than enough internet. So anyways, hey, good morning. Welcome to Forex.Today, the YouTube community of 20,000 foreign exchange traders. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. So welcome back. Hey, Bernd, I expanded the 3-day crash course. So for those that didn't quite complete the 3-day crash course, guess what? Even though you were locked out yesterday, it's open back up again today. So hopefully that helps. And hopefully you have enough opportunity to get through the course. Crazy amount of content, huh? Anywho, hey, my name is Wayne McDonald. I'm a currency trader. Been doing this a long time. Before this, I was a venture capitalist looking for, a $100 million market opportunity over many years. And then I ran into an article about some kid that upgraded his $20 million apartment in New York City so that he could buy one that was several stories higher in the same building. So he paid like $30 million for that. But there was nothing. There wasn't even walls. It was just I-beams. And that he was spending another $10 million on the interior. And that's what I was reading about because, believe it or not, I was reading about this in Architectural Digest magazine. I'm like, what a beautiful apartment. Incredible views, just custom everything. And then the blip at the bottom said that he was a foreign exchange trader. And I'm like, what the hell is a foreign exchange trader? Because that's pretty good for a kid. Like this guy was like 30 or something and he was just getting married or something. And they were making a little baby room and all that kind of stuff and having like wood imported from Africa or something for the walls. I'm like, what kind of 30-year-old is buying a $20 million apartment and putting $10 million into the interior? Turns out this 30-year-old was a Forex trader. And I'm like, damn, I'm a venture capitalist. I'm doing the wrong thing. So I didn't know what foreign exchange was. So I looked it up and it was like $2 trillion a day in volume and daily turnover. And I thought to myself, $2 trillion a day. I must be a loser looking for $100 million a year. What kind of idiot is satisfied with $100 million a year when there's a $2 trillion a day market? I honestly didn't believe it. So I looked into it and guess what? I found the better business. And that's what a venture capitalist does. Finds better opportunities and invests into them. And so here I am, 20-something years later, and it's still the best business on the planet. So anyways, that's how I got here. I quit my dream job. Amazing, huh? Yeah, I'm in the Inc. magazine Hot 100 Startups issue. And I walked away from the startups world to be a foreign exchange trader. What a good call. So anyways, I've done a lot of things, learned a lot of things, and I'm here to share it. So please let me know how I can help. Let me know how it can help. In the description below the video, there is a lot of resources that may help you, depending on your modality and your budget. There's a book you can buy It's on Amazon.com, believe it or not. And for about 6 months, it was the best-selling foreign exchange trading book on Amazon. In fact, 3 months before you could even buy it, all you could do was pre-order it, and it was the best-selling even before you could actually buy it. So anyways, I think it's all right. It's honest. William says, come to Australia. Yeah, well, I have an Australian passport. It's right behind me somewhere. Yeah. So, yeah, I could do that. Hey, if you put 50 people into a room or 100 people into a room, I'll come out. Just got to cover my travel expenses. Other than that, sure, let me know. Anywho, so you can buy the book. It might help. Yes, it talks about technicals. Yes, it talks about fundamentals. About one-third of the book is about how to journal properly so that you get 4x the amount of experience, which means you get 4 times, right? So in 1 year, if you journal properly, the way I teach you, you'll get 4 years of experience in 1 year. Cool. If you don't have, because I think Wiley charges what, $80 for that thing? Remember, it's not my book. I'm only an author. That's Wiley Publishing's book. So if you got no money, you'll notice that on the FX Bootcamp YouTube channel, there are thousands of videos associated with my work, but also a free Forex training course. Once again, if you have about $100, you can join FX Bootcamp and get 65 hours of very hardcore foreign exchange trading. It's another way. If you become a member of FX Bootcamp, you'll have an opportunity to upgrade your account and join my swing trading group, which means once a week. It's $99 a month, by the way, to meet once a week with a group of foreign exchange traders just like yourself. But for $200 a month, we meet every day, twice a day, every day. So what does that add up to? You get 10 times the value for an extra $99. So you might want to try that. You'll also need a trustworthy, ethical foreign exchange broker, one that you trust. Trader's Way earned my loyalty and respect many, many, many years ago when the market was in duress and brokers were going out of business, and Trader's Way was just fine. The way I read into that is they were not trading against their clients, so they didn't get burned. So I'm like, oh my God. And that's how they earn my loyalty and respect. If you open up a demo account and do some practice trading, Trader's Way just might earn your loyalty and respect. Cool. Tradersway.com. Let me move this and let me move that. And oh yeah, here we go. Right on, Bernd. Again, for those that were in the 3-day oil trading or the oil market crash course, the 3 days ended Sunday night and it locked you out. But guess what? I opened it back up for you. So if you didn't quite finish it, thank you for heroic effort. I know it's a lot of content. It's 15, maybe even 16 hours of material. So anyways, you have several more days to get through it. Okay. Mubarak wants to know if the Bank of Japan intervenes, how will it affect the dollar? Well, it wouldn't affect the dollar at all. It would affect the yen. Unless you think their method of intervention is buying U.S. Treasuries, but that doesn't make a lot of sense. So, okay, it'll affect the yen. That is going to be Wednesday night, Thursday morning. So we got other problems until then. Yeah, Johnny? Yeah, Johnny, you sent me your Gmail? And I sent you an invitation. So check that Gmail account, Johnny. If not, send me the Gmail email. Send me your Gmail again, and I'll double check instead of me double checking and finding it's not there or something. Okay. Well, Pavel says Japan reported inflation around 3%. Well, we know they were going to not adjust their policy until they got to 2%. No, Johnny, you're probably going to the website. Remember, it's not the website. You're accessing the actual Google Cloud. So you wouldn't just go to... I guess I need to announce this program at some point. QuantBox. You wouldn't go to quantbox.co. So again, look for that original email, Johnny, and it takes you to the cloud. Yeah. All right, so anywho, let's look at it. Pound reacting with some strength. Kiwi still weak. Aussie stabilizing. Euro finally coming down. Dollar finally going up. Yen gaining strength. And CAD still weak. So not a lot of change. Not a lot of change, although the weakness in Euro is welcomed, but I don't know if it's long-term yet. But it might be people front-running the Fed meeting tomorrow, which would be great. Doesn't really explain the pound lack of weakness. The recovery in Aussie is interesting because I'd love to see Aussie yen go up. I'd also like to see CAD yen go up, but it ain't. It ain't. So we can go through the charts and take a look at it. We can also look at gold, oil, and Bitcoin. In fact, let's start with that. Okay. Gold's still moving as expected. Yesterday, we were tickling the 5 EMA and doing a role reversal. The only challenge to this technically, I mean, fundamentally, this totally makes sense and we're crushing it. Okay. Because remember this whole period of up, we were saying get ready to sell, get ready to sell, get ready to sell. Then it dropped. Then there was a lower high, and then it dropped, and then there was a lower high, and then it dropped. The only issue I have with this right now is we've hit our target already. We should be done for the month of September. So either this moves sideways or, you know, this dollar just gets ripper strong. Remember, this is coming down. And if you're thinking, well, your grandpa told you to buy gold to hedge inflation, and you're like, we have 8.6% inflation, why is this coming down? You didn't understand what grandpa was talking about. Now, you might feel bad about that. You're like, I don't understand. I can tell you institutional traders are quite long this as well. But I also, in my opinion, this is supposed to come down. And even institutional traders have it wrong. Hey, they're not perfect. They just have more money than you. And so they think high inflation, buy gold. Well, it's the right idea, but the timing is the issue. Okay. And what caused this was purchasing by central banks. And now we don't have purchasing from central banks. Why would a central bank purchase gold now? Okay. Anywho, so this is going down. The only thing, like I was saying, is that we've already hit the monthly target. The next target is 16. We were sitting on 17 for the longest time. So we could have another $100 drop, $100 drop. Okay. And of course that will expand down if this falls. Let's say the Fed raises and says they're likely going to raise again, which means by the end of the year we'll be at 4%. Remember, not long ago we were saying by the end of the year, not we, but the market was saying 3.75 would be the terminal rate, which means next year, next summer. Do you guys remember that? It was 3.75 by next summer. Well, what's happening now is we'll probably be at 4% by the end of the year. Maybe 4.5, 4.75, maybe 5% next year. So this could just stay falling. This could keep falling. So that could be the Fed. The other thing that could happen is, and we don't have a 10-year T-note chart here, but boy, oh boy, people could, we're looking at 4% on the 2-year. People might just start buying the market now. And by market, I mean buy the 2-year note and lock in 4% over the next 2 years. And you're like, well, that doesn't sound like a good return, especially when inflation is above that. Well, you might expect inflation to come down, and in a couple of years, we'll be at 4% inflation. So you'll lose. But what if you think the stock market's going to drop 20%? Or, right? Then you've probably gone to cash on a lot of things. So what are you going to do with your money if you've gone to cash, if you got out of stocks that you think are most vulnerable, and you're going to hold your winners for the next 10 years. So you're like, I'll ride out COVID. Okay, so let's say that's your policy. What do you do with the ones you cashed out on, right? You finally decided to get out of Peloton. Great, good for you. Now what? What do you do with the cash? All of a sudden you're like, well, you know what? Maybe you don't want to deploy the cash for a while. And maybe you can buy the 2-year and collect 4%. Hey, it's not the worst trade in the world. Okay. How many people here watch treasury yields often, meaning every day or almost every day? Okay. So here is my quantitative analysis of the 10-year T-note in the United States of America. Now, the buy is based on the fundamental analysis of institutional and retail trading, the fundamental analysis of economic data, like GDP, inflation, interest rates, jobs, for example. The fundamental analysis of seasonality. There's a lot that goes into this. And then, of course, technical analysis. This is included. And what we're looking at are yields on the 10-year T-note. We're at 4.5 today. The last time we were at 4.5, this whole thing collapsed. Why? People locked in 4.5. Why? They thought next year that would be about where interest rates would stop. Okay? Now, more accurately to this is the 2-year. So really what it is it's looking 3 or 4 or 5 years out where interest rates will be. So right now, the 2 years at 4, the 10 years at 3.5, which means at some point inflation and interest rates will be high and then we'll come back down to 3.5, let's say, is one way of looking at it. So maybe in 2 years we're at 4, but in 5 years we're back to 3.5. So that's why, like Michael says, he only looks at the 10-year. Well, you could look at the 2, the 5, the 10. You could look at TED spreads and stuff like that. Okay, but you can look at the 2-10 spreads. And when the 2 is above the 10, it's unusual, but what it tells you is there's a lot of inflation right now and the Fed's expected to jack up interest rates. But another way of reading into this is predicting the glide path for the US dollar. If this is trending up, you're probably buying USD. And looking out just even 7 days. Now, of course, this is an algorithm. It's not smart enough to think about the politics of the Fed and what the Fed's going to do and all this kind of stuff, right? And it's just saying this is what's been happening the last couple of weeks. And if the next couple of weeks that price continues, doing some sort of linear regression and projections, right? Linear projections in this case, you can see that it's expected to continue to go higher, which means we could, in a week, be at 3.8. Not that it will continue, but if this continues at the same rate of change, okay, then you could read into this, the yield on the 2-year could be as high as 4.25. So you want to look at the rise, okay, over the run. So you look at over this period, the rise, okay. So this is rise over run. That gives you slope, okay, which is equal M. The formula, right, you break this down this way into quadrants because, you'd use this in calculus, but y equals mx plus b, okay? And you get that slope. Well, you're basically taking the slope, right? And you continue the rise over the run, so you get this trajectory. But then over this period, you take that average, oops, that's a straight line, and you look at the highs and the lows and the highs and the lows, and you can do variance. You get a variance. Oops. And then you take the square root of the variance and you get a standard deviation. You standardize it based on how high it tends to go before it reverts to the mean, or right? And then you square root it and put it on both sides. You get a worst case, a base case, and a best case. Based on what has been happening. Not that it will happen, but it's helping you predict. So anyways, look at this. If things stay the same, you will still be buying dollars. And it's projecting the next 7 trading days. So 3.5 to as little as 3.5. So 1 week from now, we still might be at 3.5. But at 1 week from now, we could be as high as 3.75. Which means the 2-year will be well above 4%. So we'll see. Isn't that pretty? It's pretty, isn't it? Okay. And that's it with other fundamentals. Okay. Here's your COT data. Cool. Anyways, so if that's going up, this is supposed to be going down. In a blaze of glory. Okay, silver coming down with it. Remember, silver is basically the retail version of gold. Look at that monster move. What's going on today? A lot of volatility with oil today. Holy smokes. Very similar to yesterday where it broke to the upside and then collapsed and now is broken to the downside. All right, one of those days, one of those days. This market is really pent up with all that Fed energy. So you got to be careful during markets like that because people don't agree. Or they're getting out of positions, or they're front running positions, or they're doing this, or they're doing that, but maybe not necessarily logically, intelligently trading the way they normally would. Okay. Massive bust up yesterday. Could be interesting here on a bust down. A breakdown, takedown, bubba. Okay. Kicking off that 4-hour 21 pretty legitimately. So I look at this and it's people caught between a rock and a hard place. Because for a long time they were not trading the daily, or not trading the 4-hour, they were trading the daily. And now it kind of looks like, maybe it's a coincidence, but they're kind of looks like now they're trading the 4-hour, not the daily. But I think all of this is jostling for position before the big events. I mean, we still got what, Bank of England, Bank of Japan, Fed. There's a lot going on here. Okay. I am technically bearish and fundamentally bullish. And I've been discussing that lately, where I look at this chart and I cannot be a bull yet. That's all. But I'd like to be, I just can't. Why? I have rules. Bitcoin coming down also is an argument for buying USD. A huge loss, Moses? No. I've had very, very bad situations. Yes. I guess I should say yes. Yes, there have been, yeah, but it's been a very long time ago. So I think the last bloodbath was about, I would have to guess about 12 years ago, Moses. And I thought at that point, Moses, because I was well into my career at that point. And I thought I had, how do you say it? That I thought I couldn't make those mistakes, those amateur mistakes, because I'd been trading for so long and I had, and I was doing well kind of thing. Like I thought those amateur mistakes were gone. And I went through a period and I realized after it was because I was getting a little bit sloppier every day. a little bit too confident, a little bit relaxed. Not much, but over a long period of time. And it came to the point where all of a sudden, all those little negative dents in my armor added to weakness. And I had like 3 bad days in a row, but in a matter of hours, I lost more in a matter of hours than I did in those 3 bad days. And it exponentially got worse. And the only way I could describe it as an analogy is like if you were an alcoholic and you hadn't had a drink in 10 years, and then one day you fall off the wagon, as they say in America, and you just find yourself, passed out in a back alley somewhere, right? And you're like, holy shit. Never again, right? You thought, never again. So 12 years later, I don't put myself in a situation where I could lose a lot of money. So Moses, think of it this way. The only way you could lose a lot of money is if you're trying to make a lot of money. And I'm trying for consistency and reliability. Okay, so in that case, if you never go big, you can't lose big. And once you get there, you're trading much more like a professional. Okay, but it scared me because I didn't think a big loss back then was possible. I thought I just didn't have those, I don't know, whatever makes you do stuff like that. I thought I was well past it. So again, it was like an alcoholic that thought, one drink won't hurt. And then now, never again. Okay. Yeah, never again. So anyways, this is macro focused. This makes sense to me. And nothing says up. Okay. And what I said just a day or two ago, I look at this chart, and I guess I said it here as well yesterday. Do you remember when I said precipice? We're on the precipice. I showed you the Google translation, the definition of precipice. Well, we're still on the precipice. And I think we're 2 shakes of a lamb's tail away from 15,000. Hell, why not 10? How about S&P 500 at 3,000? If S&P is going to 3,000, Bitcoin's going to 10,000. Okay. Yeah. God save the king. All right, so let's look at dollar pairs first, then we'll do yen pairs. I guess we will start here. Okay, we trapped. Do you remember? We trapped the Aussie here. Selling in the zone. And now we've had, a day and a half of, Everything is awesome. But we are caught on the monthly target, and that's what makes all of this scary. Like, don't take my messaging as like I'm trying to say this is easy. This is not easy because the down part is totally planned out. There's absolutely no discussion about that. But the thing is, technically, what could happen is it could come all the way up here and then continue down. So technically, I don't know if that's going to happen or not. And what would make that is, like, once again, this is our assumed target that we had. Shoot, we had this last month. Like I'm telling you, 4 weeks ago, we knew this price was going to be a problem. So here we are. But technically, if I didn't have that as a target, we'd just be blindly selling this. But I can prove to you it's foolish to blindly trade that way. But nonetheless, you got to be okay taking a loss from time to time. I'm not asking you to be a perfect trader because I don't want you to be fearful that, okay, this is the sell zone, but you're like, but what if it goes up here and then falls? Well, then you'll take a loss, son. Get over it. Well, I can't afford the one losing trade. It's 2/3 of my account. Well, obviously you're over leveraged. Okay. So you got to be able to like sell in there and take a loss if it does that, and then wait around for your next opportunity. Okay. And so right now it's working, but don't be shocked if the Fed meeting does this and then next week we end up selling this down. Or if China reopens, suddenly Aussie gets strong. Hong Kong, for example, is loosening its COVID-1 policy. Did you catch that? I wouldn't say opening up Hong Kong, but much less restrictive today than it was yesterday. So all of that could start adding up at some point to an Australian dollar rally, but also a Canadian dollar rally and also a New Zealand dollar rally. But not today. How do you trigger into a trade like that? Oh my God, that's the easiest part of this whole thing. Okay. So let's say you're in the day trading group and we identify this a day in advance. You listening? I'm on a 5-minute chart. So when we approach this area, you become what we say in the day trading group, ready, willing, and able, RWA. And you look for your sign. What's the sign? I don't know. That's your brain has to make the interpretation. What's the sign? Some sort of reversal needs to occur on a very, very short term. We know the price. We don't know the time. That's all we care about. And so price comes up. Do you sell now? Well, it's not bearish. Do you sell now? It's not bearish. Do you sell now? It's not bearish. Oh my God, lower low. Shields up, red alert. What do you sell? Lower high. Rolls over, you're short, you're done. Goodbye. Stops up here. Goodbye. Done. Easy peasy lemon squeezy. MoveOn.com. Go find some other trade. This point, I would recommend jamming your stop at break even, keeping it above maybe, well, about here. So almost break even. Okay? Because, once you get this lower low, you would move the stop from, oops, that's level. You'd move your stop from there down to here. Hua. Okay. Okay. Okay, that's that. That's how you do it. But remember, we're still technically in a range. So don't go out and sign the yellow Lamborghini lease yet. You're like, I got it figured out. I think I'll lease that Lambo now. No. Not yet. Okay. So that's just a pissy little day trade. And it's a tight zone. This is a tight zone. We have the monthly target as a bottom. And we don't even have a good swing trade. Like, it's not a good trade, but it's a trade. It's a day trade. It's not a swing trade. The position trade, you're done. So it's more like a hopeful trade. Are you maybe front running the Fed meeting? Well, don't be shocked if this goes up before the Fed meeting and then we do something like this. Ciao. Okay. Right on, Burns buying a farm. Sorghum. I got one word for you, son. Sorghum. Everybody loves sorghum. Anywho. All right, you see this trade? There's a lesson here. What's the lesson? First of all, this is not a good trade. Okay, the trade I set up for the day trading group and the swing trading group is not the one you're looking at. Okay, it's this one. This is the one we set up about a week in advance and then it's dropped. Okay, that's the good trade. But I'm in here. This is not the good trade. So what do you think the lesson is? Type it in. Think about it for a second and then type it in. What do you think the lesson is? Take a shot. Well, I wouldn't say it. Yeah, join that day trading group. Yeah, maybe. Patience. I'll give you a hint. Okay, so I sold it at, what is that, 61? We're at 59, so I'm up a couple hundred pips. All I did is let it run. This is a scalp. I scalped the inflation data 1 week ago. I've been short now 1 week. I have not done anything to it. I haven't done additional work. I didn't work on it all week, like working on a car. How many hours on the Kiwi dollar have you put in? I put in 5 minutes worth of work over the course of 1 week. But see, I'm convinced on my direction. I have a bias. I'm convinced on the technicals. Remember, the trade plan was sell it off the 21. This is me scalping the news. Doug is right. Fundamentals. I am convinced what you might be missing in your trading are fundamentals. We know one of the universal truths of trading is letting your winners run. So yeah, I scalped 200 pips, but I expect at least another 100 pips more. You're welcome. Did I? Well, see, it was a scalp off the news, but I certainly talked about it. Remember that the day trading and swing trading group members got this trade. That's the good trade. As far as I'm concerned, you should be short around, 61? You should be short around 61. And we're at 59 and falling. So this isn't very good. I'm in at 75. You know, if you were following this right, it's really about 61.50. But of course, you need the confirmation of the kickoff and all that kind of stuff. So the better trade is here. This is just a pissy little, stupid little 5-minute, pathetic little trade. Trading the vol. But the thing is, I'm trading the vol in the direction of my fundamental bias and my technical bias. And therefore, it's worth more. There's no difference between a swing trade and a scalp, except for how long you let it run. But the scalper doesn't know the trade they took, if it's worth 12 pips or 120 pips, because they don't have a bias. Okay? So there you go. That's the lesson. If you're going to make it in this gig, you have to have more valuable trade plans if you want your trades to be more valuable. No, Majip. No, you'll get there. People often do that course probably 2 or 3 times. Anywho, that's all. So all I'm saying is that's not even a good trade. It just had a decent plan associated with it, right? Here's another trade. We'll see. We'll see how it goes. Got a Fed meeting tomorrow that could be important. It's just hanging out in la la land on this 4-hour chart. Lots of support above us, below us. I would just drag this across. That's all. So now we have it trapped between my entry and the bottom. Wouldn't Japan intervene to stabilize the yen? I don't know. We'll find out. I exited all my yen trades a week ago when we hit the targets. I'm not in those trades anymore. Who cares? I don't need to guess. There's no value in guessing. So I'm going to wait for the Bank of Japan to tell me what they want to do, and then I'll make money with what they tell me. That's all. There's nobody who cares about the guess. Won't they? Won't they or will they or won't they? Who cares? Majib says Bank of Japan will still want to pursue yield curve control. Yeah, probably, right? But they could change the target to 28 or 30. That will have an impact. They might raise interest rates to 0. That might have an impact. Okay. Maybe it's time to take profit on the Nikkei. Let's take a look at yen since we're talking about the BOJ. By the way, all the stock markets around the world are crashing, right? Not in Japan. It's slightly neutral, almost bullish. Okay? And if you look at seasonality, you can see we had a big drop early in the year. Uh-oh. Okay. And compared to the other stock markets around the world that are down 30%, you know, if you're banking, the Nikkei being, let's say, slightly positive or let's say neutral, or even if it was down 5%, relative to everything else, it's doing epically well. And so it's actually scored a neutral. I don't know if we have any other scenario where that's the case. JP 225 year to date. Let's see if we have a... Okay, it's down 5.5% year to date. But up 2% in the past 6 months. Hey, that's way better, right? Than what? Down 20%. So Nikkei's holding its own, right? It's pretty amazing. Yes, Manus, the Bank of Japan, I believe that's true. Let's say 2/3 of it. Yep. Okay, so right now, the reason it's neutral is that it's not a bullish technical trend in the moment. And we can see this drop here. But usually this time of year, the Nikkei rises. This is the seasonality. Okay, if you guys are still spending, what, $30, $40, $50 a month on your seasonality service, you might want to consider switching, because that's just one tiny thing you get with my service, which is super secret right now. Okay, now this is the disappointment. What I've been talking about, and I talked about this last night, what I want is this, and I'm really hoping for it, and I'm waiting for it. But the threat here to this idea is that this is bearish. Nothing I can do about it can change that. So what we've been talking about is looking for a pattern like this, and I said that would be great. There's another scenario for Aussie yen as well. But I'm like, well, we don't have it technically. Plus, we have the issue with the Bank of Japan on Thursday night, or when depending on where you are, right? Wednesday night, Thursday morning. So I'm like, I kind of need to wait for that to figure out what the BOJ wants to do. In the meanwhile, even though I want to buy this, I can't really buy it, especially on this time frame. I just can't do it. And now here we are. That was about 12 hours ago. And yeah, we're on our way back down. And that makes sense to me. That's actually, if I was agnostic, okay, if I was price only, okay, that is quite clearly a sell. It's a bit out of position, and I would say this would be the target around 106. Okay? But I think what's still going on as we approach the role reversal, you got to remember a week ago, a week and a half, 2 year ago. Oh, I am a bear, just not today, Stewie. Okay? So, Stewie, I was in this trade. And guess where I got out? Here. So now I sit and wait. And why did I get out? Because it's supposed to fall. So for everyone that doesn't understand why it suddenly fell, and I say it's supposed to, and you don't know what I'm talking about, you must join FX Bootcamp right now. Because when I say it's supposed to, and you're like, I don't understand, you don't know how to trade. So you can keep pretending. You can keep doing something else. Maybe you need to learn Elliott Wave. Maybe you need to learn options. No, dude, you just don't get it. You don't know. So you have to throw your hands up and admit it and say, well, I need to know. I need to know this. Or you can fight me, and that's ego. That's your ego. That's your childish ego. Oh, don't get mad at me. This is your childish ego saying, I can do it myself. Like an 8-year-old. I can do it myself, Daddy. I can do it myself. And then I'm supposed to tell you, oh, you're such a good boy. You figured it all on your own. What a big boy you are. That's not what a professional athlete would say. A professional athlete could be the best, let's say, basketball player, the best football player, the best baseball player, the best golfer, the best boxer. Guess what? They all have coaches. They all have dietitians. They all, right? They ask for help. What more can I get that will help? You need to expand and be big. This is your business, and bringing in help and resources and tools and coaching is what a professional would do. So you got to get rid of the childish ego. Like if you ask for help, right? It's bad. Mm-mm. 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 And you should see the athletic world now is way different than it was 30 years ago. They're all professionals, right? They even have, I'm sure every athlete has like a media consultant to help them with social media and stuff, right? They all have coaches. You need to say, I don't want to figure it out on my own. I want to get big. I need a team. I need a group. Okay? You got to change the attitude. You got to get big. You got to get smart. You got to get powerful. You got to get informed. That's my advice. Not how can you do it on your own, but how can you expand your business? Okay. So anyways, we're waiting for most of these. So let's go here. I did take a roll reversal shot. Okay. I'll move my stop a little closer now because it looks mediocre, but this is, see how it's different than the CAD a little bit? It's still not a good trade, but we have a floor printed here, and then we have a higher high here, and then we have the roll reversal here. You see it? And so I could argue something like this, technically. But fundamentally, I would argue it's not a good trade and it's quite early, and that I have a high probability of this not working out. But at least there's something to it, right? It's not a guess. If I'm a bull, I have a bottom, I have a confirmed higher low, then I got a confirmed higher high. So what do I do now? So I did this last night in the day trading group. I threw down a buy order right above the roll reversal. And now maybe I get lucky, maybe I don't get lucky. What, are you going to judge me on that? It's just a trade. Am I trading my bias here? Yes, but this could change, so that's risk. And I would love this to work out, but that's way early. So this is quite a mediocre trade. But the technicals are there, you see? Oops. The technicals are there. But it doesn't make it a good trade. Because really you could think of it like, what if the technicals are bullish and everything else is bearish? Well, then you did the right thing in the wrong direction. Or we're in a period of change. Okay? So currently this is neutral. Okay? Look, institutional traders, 75% of them are short yen, 75% of them are short Aussie. Retail sentiment, 50-50. This is a dead trade. It's just technically bullish. But the thing is, what if the technical trend changes from a +1 to a +2? Well, then I'm making money on my trade. And this kind of moves more to neutral to positive. But right now, it's really uncertain. Okay? GDP, they're equal. Unemployment, hey, they're both good if you ask me. But look at the interest rate differential. So I earned 2.5%. So it's like, when does this roll up, really, is what I'm looking at. If it rolls up, maybe things improve. Because even though, like, there's a battle, like Japan wins versus Aussie, they're both good. Okay? Those are both good numbers. Europe, the Eurozone for unemployment is 6.6. The question is, why didn't I buy the Head and Shoulders? I'm not trading the Head and Shoulders. Okay? And you're below the moving averages. And if it's fundamentally neutral, I need the higher high before I can buy anything. It's not the higher low that I want. It's the higher high. I have to break resistance. Okay, Bernd? Remember, I don't trade patterns. A pattern is, what? A bet? Okay? I'm not interested in the patterns. Okay? I'm interested in price action. I'm interested in trend. Don Pablo says, so you think after the Bank of Japan meeting, the yen weakness will return? I don't know. It's not my job to guess. Like I said before, the Bank of Japan's going to tell me what their new policy is, and then I'm going to make money. I don't make money on guessing. It just is what it is. But what I'm saying is I could, if I started to say things like, what if the new news out of China, which is not economic fundamental data, it's a future expectation of economic data. Now I'm being a trader. I'm not an algo. See, the algo is telling you what is factual. That's what this is. It's just sitting on the Google Cloud, analyzing economic data, positioning, seasonality, technical trends. So it's looking at charts. It's looking at news. It's looking at history. It's looking at positioning and quantitatively analyzing all this data. But you're 10 times smarter than an algo. You just don't know how to do all this stuff, or it takes too much work. And then to do this for like 38 different assets just blows your mind. So the computer just does a better job of doing it than you can. Cool. Don't hate it. Love it. It's another tool you could use to leverage up on your knowledge. But then we can be smarter and say, okay, this is true. This is facts. It's right. But we need to predict the future if we're going to add value. So I could say, well, now with the news of Hong Kong reducing restrictions, maybe this is tiptoeing towards the rest of China, because remember, they would need permission from Beijing. So what if there's like this twist of things are getting better? Maybe Beijing wants to go into the Communist Party that I think that's happening in a few weeks, their big annual meeting. Maybe she wants to come out and say, look, it's been working. Everything's better now, or getting better, and we can have a new policy. And everything I did worked. That's why you should love me. Maybe that's the play. Cool. I don't know. But if China reduces its restrictions, maybe that's the green shoot, if you will, talking about like planting seeds. Maybe that's a green shoot that says the worst is over. Things are likely to get better. And in 6 months from now and 12 months from now, the Chinese economy will be growing and demand for Australian commodities will pick up. I don't know. Could be a rabbit, could be. If others believe that too, then maybe that little pissy little trade I did last night works out. If not, what am I going to do? Lose 12 pips? Who cares? 25 pips? Who cares? But with that rationale, what you could do is start looking at the changes. And we start looking at maybe an improvement in here and a reduction here. Okay? And an increase here. And look. Traditionally, this goes up this time of year. And so all of a sudden this, right? this could rotate this way, and this ends up going into a buy as all these numbers change. And then more time goes by and it turns into a strong buy. And I might be tiptoeing in when it's still neutral or just turned to a buy. And I can think ahead and the algo can't. And it all started with, I don't know, man, that maybe kicking off this monthly pivot was important. Maybe kicking off this bullish buying zone on Monday was important. Maybe Tuesday morning, the higher high was important. And maybe just maybe, I'm almost certainly too early. But what if this works out? You know what? I will hold it to the end of the year because I'm going to get paid, son. Why? Because there are 3 ways to make money. Be first. So I'd be first in. This is still fundamentally neutral. You could be smarter. Hell, with all that information, maybe I'm smarter. Or you can cheat. And I ain't cheating. Okay? You might say, Wayne, it is cheating to have all that fundamental and technical data. It's not fair. Yeah, well, it's $80 a month, bro. Ha ha. It's only for the rich. Oh, by the way, only for the rich. Oh my God. I got 2 IRS letters sent to me yesterday. Do you guys like opening up those IRS letters? I got 2 of them. 2 IRS letters the same day. Oh yeah, they're right here actually. IRS. Uh-huh. Yep, 2 of them. Scary, right? I owe us money because they always love to tap me for more money. Look at this one. I can't see. Maybe if I do it this way. Look at that. Yeah, I guess I could show that. Overpayment! Good. Huh? Yeah. Community chest. Can I show this one? Here's another one. Refund! I'm like, what the hell? What the hell? The government's paying me more money. Gee whiz. Oh, I'm sure. Yeah, the Dutch, they have to bail out Germany, and Germany has to bail out Greece. I think that's the way it goes, right? Yes, look at that. I get a couple of $1,000. Woohoo! So I overpaid my taxes. So that's like by a blip. I pay plenty in taxes. Yeah, the good news, but yeah, it is rare. But in 2006, I overpaid my federal income tax, overpaid by more than $100,000. And I overpaid my state taxes by $50,000. So I'm an entrepreneur. I own businesses, right? So I never get tax refunds. But that year I got hundreds, right? Well, I got six figures, let's say, as a tax refund. And on the flip side, from the state of California, I got an IOU for the $50,000. I got an IOU letter. The state of California didn't have my $50,000. So I got an IOU. And I had to wait maybe 9 months or a year. And then California paid me $50,000. I think it was $55,000. Holy smokes. Holy smokes. So anyways, this year I get a couple of grand. Because let me tell you, you know, I don't, even though they paid me interest, I don't know. They actually paid me interest, which was kind of cool. But I think back then they didn't. So lucky me this day. Lucky me. The funny thing is they send the letter and then they're like, we'll mail you the money in a couple of months. I'm like, why didn't you just put the check in the envelope? Why does it take 2 more months to like cut a check and mail it to me? But whatever. Cool. So I will leave you here. I'll leave you to it. This one worked out much better. This was the other one we talked about last night. Cool. Okay. See? Watch this. No. Cool. So I'll leave you to it. I hope you have a wonderful day. Hope you have a wonderful day. I will see the day trading group at 7 p.m. And Ryan will lead the day trading group at 2 a.m. Wowzer. Lots of resources, lots of help, guys. So thank you for being in the community. Remember, check out Trader's Way. We all need a broker. You might as well have a good one. Why not, huh? Peace on earth. May the pips be with you. May our profits be above average.